You're welcome to another series on LAUTECH Open and Distance Learning Center. This is ACT 202, that's Financial Accounting 2. Study Session 2, Accounting Records of Non-Trading Organization. Introduction. A non-trading organization is one that does not intend to make profits, and this implies that it is not actually involved in trading or selling anything. In such an organization, the company is not offering its services in return for money. Instead, it offers its services free of cost to the customer. As a result, no trade or exchange takes place between the provider and the customer. At the end of this study session, you should be able to define a non-trading organization. You should be able to explain the items in accounting records of non-trading organization. And lastly, you should be able to discuss the records that are maintained by non-trading organization. Meaning of non-trading organizations. Non-trading organizations are organizations that are established for the purpose of rendering social services to its members and to the society at large. This is also known as non-trading concerns. Such organizations include clubs, hospitals, libraries, trusts, professional associations, as well as unions. These organizations render their service to the members and to the general public. For instance, a club provides sports and other recreational services to the members, while hospitals provide treatment and services to the patients. Items in accounting record of non-profit organizations or non-trading organizations. The following are the items in the accounting records of a non-profit organization. 1. Subscriptions. 2. Donations. 3. Entrance fees. 4. Life membership fees. 5. Legacies. 6. Special funds. 7. Sports materials used. And lastly, honorarium. Now let's take this one after the other. Subscriptions. Subscriptions can be described as the sum of money paid regularly or annually to a charity or as a member of a club or to receive a service. In the case of trading organizations, the subscription refers to the annual charges that are paid for trade journals or for the membership of some organizations, and so they are treated as expenditure. But in the case of a non-trading organization, subscriptions are paid by members as a source of income. 2. Donations. Donations are voluntary contributions from various sources, and they are sources of income for the organization. All donations are recorded on the receipt side of the receipts and payments. However, if it is a general donation of a recurring nature and the amount received is small, it may be recorded as income in the income and expenditure account. But if the amount received is so much large that it's of a non-recurring nature, it may be capitalized and added directly to the capital fund, that is the general fund on the balance sheet. 3. The entrance fees. This is a common practice in clubs and societies to charge entrance fee, that is admission fee, from new members at the time of their admission. It is usually treated as income shown as such in the income and expenditure account, but some clubs charge exorbitant amounts as entrance fees to limit the admission of new members. In such a situation, it is argued that the entrance fees is in the nature of a premium that is charged from new members towards the capital cost incurred on the establishment of such club by the old members, and therefore it should be capitalized. Life membership fees. Certain institutions also provide for life membership and charge heavy fees from persons who opt for it. The amount of subscription received from them is termed life membership fees and is treated as a capital receipt. In other words, the life membership fees are not shown in the income and expenditure account. It is directly added to the capital fund as shown in the balance sheet. Legacies. Legacies donate the amount or property received as per the will of the deceased donor. This type of donation is not a recurring phenomenon. It happens once in a while and the amount received is generally large. Hence, the practice is to capitalize it and show it straight in the balance sheet. However, the small amount of legacies received from time to time may be shown in the income and expenditure accounts of the relevant period. Special funds. The institutions often create special funds for special purposes, such as prize fund or sports fund. Any income received on account of special fund investment should be added to the fund concerned. Similarly, any expenses incurred on such specific purpose should also be deducted from the special fund. However, these transactions are not shown in the income and expenditure accounts. The next is the sports materials used. In case of sports club, the expenditure on sports material is a common item, but the materials purchased in an accounting year may not be fully consumed, so some materials may still be in stock. Hence, to ascertain the exact amount of the year, you have to work out the amount of materials consumed by adjusting the opening and closing balances of such materials in their purchases. And lastly, we have the honorarium. The institution often takes the help of outsiders, that is, people that are not employees of the institution, for some work of the organization, such as inviting academicians for special lectures or some artists to give performance. The amount paid to them for such services is called honorarium, which is shown as an expense in the income and expenditure account. The remuneration paid to the secretary or the treasurer may not be termed honorarium because they are not the employees of the organization. Records of non-profit organizations. The non-trading organizations like clubs and societies differ from the trading organizations in several respects. They normally do not indulge in buying and selling of goods and accepting or receiving bills of exchange. Hence, the major sources of their income usually are subscriptions from members and donations, while most of their transactions are cash transactions. Hence, they need not maintain as many books of accounts as trading organizations do. Records of non-trading organizations continue. The main objective of keeping records in non-profit organizations is to maintain the statutory requirements and exercise control over the utilization of funds. Consequently, they maintain a cash book to record all receipts and payments, or separate cash receipts journal and cash payments journal to provide necessary details, and other books like members register, minutes book, and fixed assets register. I want to believe you are fully conversant with cash book, as you have been taught in the SS2 in the last semester. Hence, the other books, that is the members register, minutes book, and the fixed assets register, will be fully discussed as far as this study session is concerned. Now, let's take these books of accounts one after the other. The members register. Most charitable institutions are organized as societies which are registered with the Registrar of Societies. They are required to keep full record of their subscribers, that is the members. Hence, they maintain a member register which shows their names, addresses, and date of admission. The next is the minutes books. Societies function on the basis of decisions taken by the general body of members and their managing committee. They have to keep separate minutes books for recording the proceeding of the minutes of the general body and that of the managing committee. Hence, a minutes book is a permanent record of the decisions that are taken from time to time. Fixed assets and register. Every society possesses fixed assets like furniture and office equipment. They have to keep complete record of these items in a register that is called the fixed assets register. Similarly, they also keep a supplies register of consumable items like stationery and sports materials, which, in addition to the details of purchases, will also show their consumption and balances. However, it is worthy to note that non-trading organizations also maintain a ledger containing the accounts of all incomes and expenses, as well as assets and liabilities. This facilitates the preparation of final accounts at the end of the accounting year. I'm sure you had a wonderful time listening. See you in the next session.